Okay, cool. We're live once again, Bongs. And I see today we've got the Google shirt.
Yes, of course, I do. You know me, I don't buy clothes, so I just get freebies. So that's what I have. So yeah, you'll see all of my clothes, or most of my clothes, just freebies. I'm stingy like that.
Yeah, so it's safe to say that as a developer, you can basically live off freebies. You don't need to buy a whole wardrobe, you know? It seems like a thing that companies always dishing out free.
Yeah, because there's like meetups almost every week. If you go to those meetups, they normally have your freebies, so you can get free stuff. And yeah, it used to be like I enjoy going to meetups, right? Because I learn a lot of stuff from those. So if I'm in my own bubble without communicating or looking at what's out there in my space, I don't get to grow much because I'm only focused on this thing. I don't get the latest trends that are going on. So I go to meetups, I'll go to conferences, I'll go to anything that can give me something that I right now don't know. If I catch it, then cool, that's good for me. So when I go to those kind of setup, then they'll normally have usual stuff for developers / engineers.
Free food.
They have freebies and what's the other? Obviously, the usual beer. So yeah.
Okay, so I think let's maybe get into it. Like, obviously it's been a big week for you. We're going to maybe touch on that a little bit without infringing on IP. BankZero has finally launched. You're a team lead at BankZero, so we can try and see what we can talk about there without getting in trouble.
Sure.
And on my part, I've made a big move in my career coming out of the hardware enterprise embedded system kind of industry, which I've been in for the last 7 years. And I'm venturing into basically what I call the bubblegum software world. Obviously a very different stack. Obviously there's a lot of fears, a lot of excitement. So maybe I can touch a bit on that. And yeah, I've been studying a lot of VCs this week. You know, Peter Thiel, Mark Andreessen, Ben Horowitz, just poking their brains. Shamark from Facebook, David Sachs, just getting their difference.
Why are you doing that? Are you planning to raise Series A or something soon?
Not really. I'm at a very unique and exciting position where obviously, you know, we've worked on a few startups together. Some have been great, others are pending. And I'm thinking about what new problem I'd like to solve from a startup perspective. And so I'm kind of like trying to get a feel from a lot of these great minds. What is their thinking? What do they look for? And just so that I can start this journey from a very, not just informed, but intuitive perspective of what is worth solving and going for. So that's kind of like the space that I'm in right now.
Okay. That's good then. Sure.
And so let's jump into it. Like, okay, cool. I saw the Twitter announcements, the media announcements. I think I've got onto the test flight beta version. BankZero is launched. What has your experience been like? And yeah.
Yes, we're finally live. We are live, people. Okay, yes, we're live. So for those who don't know, there's a new bank in town. Just launched, obviously launched to the public on Tuesday. So, and then I myself joined the project, I think last year sometime, like at the beginning of lockdown. I think May, April, somewhere there. The beginning, like when it started, I was just jumping on to my new project. So BankZero, essentially, if I have just to explain it a little bit, is like I say, it's a digital bank. My score. It's a digital bank, and then what does that mean, right? So it right now, BankZero operates purely on the internet. It doesn't have any physical branches. So for you to open an account with BankZero, you have to download an app, which is iOS, or Android. And then you put your information on there, do your onboarding registration. And then once you're done, we do your KYC. So once you're done with the registration, automatically just you're part of BankZero. And then they will do their own DD and whatnot. And yeah, so that's BankZero right now. And then, so the whole week we just been focusing on, or I myself just been focusing on making sure that things are stable, because my team, like I said, Fabrice mentioned, I'm one of the team leads in BankZero. So for me, I'm leading the team that's responsible for onboarding, your backend team that's responsible for onboarding, and then also the team that's responsible for doing building systems for the back office team, or the one that does KYCs and those kind of stuff. So that's been me. So that's why this week has just been hectic for me, because we've just been solving those problems. So yeah.
Okay, sounds like a lot of sleepless nights. And yeah, so I think like for you guys, obviously without getting into any nitty gritties, like what can like an end user like myself expect? What's different about BankZero that is obviously sets itself apart from, let's say, Discovery, Nedbank, FNB, and all the likes?
Yeah.
So what are the key things that stand out with BankZero?
Let's put it this way. Let's make it more conversational. So when you register and everything, right? What's your experience so far?
Okay, so obviously what is cool
with the onboarding part of it.
Yeah, so obviously I saw the Twitter announcement and I saw it was closed for some people. Went on the website, put my registration up, my email. They sent me a link for test flight, I think in probably less than about 2 or 3 hours. So what was interesting was that, okay, it did feel a bit long. Like there was quite a few steps that I had to go through. The one thing that was different was the whole voice authentication thing. That was new, all right? The idea that I needed to say something. So it kind of made me feel like, okay, is there some kind of machine learning, natural language processing going on in the background? Then obviously the usual visual onboarding, getting my pictures, getting me to blink. That was also a bit, okay, I've seen variations of it, but that was like, okay, there's a lot of use of different things like video and audio, all right, in terms of self-identification. And yeah, I think that was pretty much it. You know, it just, it felt like I pretty much went on a journey and they collected a couple of things. There's a usual uploading your ID, proof of registration and stuff like that, which I won't lie is always annoying because I need to go and find it. And if it's not on my phone, I need to go and like download it. So there is that element of it. And, but otherwise, yeah, it felt, what stood out for me was the voice. That really was the one that stood out for me.
Okay, cool. So you touched on something. You said it felt long. Why do you like relative to what?
So obviously as a mobile developer myself, there's kind of like two philosophies. You know, you want to get as much as possible from a user so you can set up their user experience afterwards to be perfect. Or you want to get them in quickly, you know, like, sign in with Google. And then afterwards, when they try and unlock features, then you force them to upgrade their profile or you force them to add information. So this felt like it was one of those where you're getting as much as possible about me so that afterwards, obviously, I don't have to worry about this again. So that's how it felt long. It felt like, okay, cool. I'm basically giving everything right now. And so I think that was...
Is it longer than other digital banks or longer than typical banks, or besides, because like with banks work within a certain regulation, right? For I think for a bank to operate or for you to have an account, we need to have as much information as we possibly can to determine it's you, right? That's like it's a general financial thing. So it's, I think, one of the I forgot which regulation, but then it's general South African regulation thing. So with that aside, so that thing it's like that needed. It's a thing that needed. You can't go and open an account without them knowing it's actually you. How to find you? Is it actually your name? Can we verify it across other platforms and databases and whatnot? So that's necessary. So now what we probably can talk about is maybe is it longer is it longer compared to everything else? Because we've seen on Twitter, because we've seen on Twitter people are like, oh yes, I just opened my account in less than 3 minutes, blah blah blah. But then yes, there's other digital banks who does that. Even the big banks, even now right now, onboarding specifically, most of them now you can open an account online. So the onboarding part of things for me is not a big deal, but then for other people it is a big deal because they're not aware that you can actually open an account in other banks very quickly, just on your phone. I've done it with Capitec, I've done it with Standard Bank, I've done it with Times, so that's possible.
Okay, to be honest, I'm probably the worst person to ask. Like I've got I think 2 bank accounts which I've opened years ago. And they've never really gone and opened any new account recently, So I think that so obviously I'm a naive. So obviously that means I'm comparing the onboarding banking experience with the typical app banking experience, which obviously is not the same, as you mentioned, for the reasons you mentioned. So that was interesting. I think I think it sounds exciting. Maybe I can dive in a bit more. What's been the experience as the company, BankZero? What's the culture and the vibe like? I remember in 2018, I think I was listening to Michael Jordan on Power Business at the time, announcing BankZero, talking about it. And there was one key thing he mentioned was this concept of building a lean bank, in the sense that obviously it doesn't cost so much to run a bank. So his obsession was about this idea of reducing costs by obviously not having branches and all these other infrastructure that normal banks have. So between that idea of building a lean bank to where you guys are right now, obviously don't divulge anything that you shouldn't divulge. But yeah.
It's always I don't know what I can't speak for the company, but I can speak for my experience in the whole thing, in the project. So for my experience is mainly, obviously, the main thing was to build everything from scratch, right? And then I came in as well. I did my part with my team for that, and then there's the core element of it, which is the core of banking, like transactions and making sure your EFTs, your card works, and all those kind of stuff, right? So to do that, the nice thing about it is BankZero actually, what I'm seeing, we've done as what do you call it? Jordan and Yatin on social media have mentioned they've done that part from scratch. They've built that core from scratch, right? So, which is one nice thing about it, because if you look at other digital banks, your FNBs and what do you call it? So digital banks and then your FNBs and your Absas and Capitec, mainly they just get a standard off-the-shelf banking system, and then they start building on top of that, or they start tweaking it. Obviously, if you get a standard thing, tweaking it is a bit tricky. And then what BankZero decided to do, which I'm seeing now, it's good for us, is to build everything from scratch, which is a great thing. But the pros and cons of building things from scratch is that stability, from a stability standpoint, I guess it might be a bit finicky, but then you can see that things are great right now. On us right now, we don't have that stability issue, which is a great part at the moment. So yeah.
Okay, cool. Sounds exciting. Maybe let me try and navigate away. At least I get you to divulge too much accidentally. So from like a banking perspective, how would you describe the banking environment? Like, obviously, not every Tom, Dick, and Harry can wake up and code up a bank. All right. So what really goes into like building a bank besides the tech aspect of it?
Okay. What does it take for me before? Like, as you know, Fabrice, I hate banks, right? I hate working for banks. I hate working project in banks. Why? Because of they take long. Like the projects takes long to get to where you want to be. So I'm coming from a background where things are lean and fast, right? But then obviously you need to add this whole thing of safety and make sure things don't break. And everyone's money is secure and whatnot. That part I understand. If you look at my my previous ventures, right, in the crypto space, take a lot, etc. So that part I understand. So now with BankZero, like the whole, like we're moving fast, but then I know that we are safe. Right, the way we do things, our stack and everything else that we have has been great. What am I talking about? That even forgot what I'm talking about. Yes.
No, it's fine. I guess the thing I wanted to pick on was this idea of just banking, that balance, I guess, between moving fast and so-called breaking, and obviously the fact that it's regulated. All right. So like if I woke up one day and I wanted to create a bank, what does safety actually mean? We always hear about these invisible regulatory forces which stop you from, let's say, innovating and moving fast. Who are they? Like, is it the Reserve Bank? What is it exactly about banking that maybe needs you, prevents you from moving as fast?
Okay. No, I think it's mainly for my experience. Okay, obviously you need to get a banking license. There's different versions of them, but overall for now, let's just say you need to get a banking license. So you'll know that other banks, they don't have their own license. They will piggyback on some other bank's license. So if the problem is that if that bank that you're piggybacking on dies, you also die, right? So there's sort of examples of that happening. I think there was a digital bank that was launched in somewhere 2000 something. I think it was one of those early digital banks that was purely on the internet. I think I forgot who's the owner. Yes, the owner is the guy who owns the what do you call that company? I think it's 727 or something like that. From Old Mutual or whatnot. The one that helps you with your budgeting. What it's called. But yeah, back in the day, he did that, and then he piggybacked on some other bank's license, and then the bank died, or that thing died, and then his company also died. So that's one major thing, getting the license. Once you get the license, obviously to get the license, you go through Reserve Bank, and then they need to know your plan. You need to give them a certain amount of money. I think I forgot how much, probably let's say $500,000 to make you secure. And you need to give them your business plans, that how the bank is meant to, or how the bank is going to make money. And then you get that, and then you start building, right? When you start building, once you do that, you can actually operate as a bank, but then to do other things, let's say to be able to send money through, let's say your MasterCard, your Visas and whatnot, you need a license from them as well. So regulation comes in that aspect in terms of banking. So everything, you can't just wake up right now and say, okay, cool, I want to be a payment aggregator, like your PayFast. No, you can't do that. You need a certain license and or piggyback on someone else's license. And then Now to do, let's say, foreign transactions, to be able to accept foreign transactions, you need to have a certain license. So you need to go through that process. And then, so as you go along with that, your initial license, as you go along, to make a fully fledged bank, I'll say, you need certain licenses for you to be able to get to those things. That's from a regulatory standpoint to sort of kind of, I guess, limit you on what you can do. And then every process obviously requires money, et cetera, et cetera. So yeah, that's, I guess, from there. But then once you have those things, it's up to you. Whatever you do, it's up to you. Whether you whatever, like your internal, what do you call it? Philosophies in terms of how you run your team, agile or not, or blah, 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 that doesn't matter. As long as everything that you do, it's auditable, which is a major part. And obviously you need to think about POPI compliance. You need to think about all the financial compliant things that you need to follow, blah, blah, blah. So from a software specific, running a project, making sure stuff done, assuming that all those certificates are sorted, from a regulatory standpoint, you can do whatever you need. So other banks, I'll say they don't do that because of maybe the way they've structured their code, or they structured the system, their core system. So if they touch something, if it breaks, they can't recover quickly. Maybe because, like some of the banks, the fundamental base of it,
the monoliths.
Yes, it's using a lot of them they're built using COBOL, and then the only people who understand COBOL is the old guys.
Yeah.
Yes. So now they have to always. I have a thing. My boss also knows COBOL. So in one of the banks that he works at, so essentially just now and then they'll call him and say, "Hey, this thing that nobody wants to touch is broken again. Can you come and touch, do a few things, and then here you go." So those things are there. It's those things like nobody wants to touch, but then nobody wants to touch because of maybe higher management said, "Do not touch this. It works. Don't touch it." Sure, I understand that part, but then if it's not maintainable, nobody can maintain it. Then it becomes a bit difficult for you to change things. You remember when FNB tried to. Now, when they try to move into digital space, adding the app, adding the thing, that process alone was a bit mission, because the way the system has been architected, the core system has been, the way it's architected, I don't think it was conducive for change. So they have to do a massive project. Based on what they say on the news, of course, they do a massive project, and then whether it goes on or not, then yeah. So the major thing is, if you put your project correctly or your systems correctly, you can change it. Or is it from a project management standpoint, from a business standpoint, and everything else, it's fixable or changeable as you go along. You're good to go. There's nothing regulatory that says don't do this, as long as you can audit it.
Okay, that sounds pretty interesting. So I guess there's basically, for lack of a better abstraction, there's the old school way of building the bank, and then there's the new school way, which you guys are tapping into, all right, of building a bank. And maybe before we move on there, I want to ask about this infamous mainframe that we keep hearing about, which is running all the banks. What's that all about? Okay. This IBM mainframe.
Mainframe. Okay, so I also started learning. I also started knowing about mainframe when I jumped into BankZero. So for me, like obviously, most banks use it, and then I try to understand why like here at BankZero, why we're using a mainframe. Because now we're trying to be all digital, open source, and whatnot, all these funky stuff. Make sure we move fast, and then we're able to give what the clients need securely, but then using modern architecture and modern way of thinking, and try to disrupt as many systems as possible. Okay, cool. That was what BankZero was saying. But then when I started questioning why things are like that. I'll say for me, I'm not sure why it's like that, but what I can understand, I think it's just mainly the safety it gives in terms of the transaction throughput that it can do, CPU-wise, RAM-wise, whatever. So that's my main takeaway. And then whether IBM or not, for me, I'm just assuming it's the whole corporate world thing of saying we need somebody, third party, who can
try and test it
out. Yeah, who can sort this out. If anything goes wrong, we know who's liable. But yeah, I probably know. I need to probably ask someone in BankZero. But yeah, that's my take on it.
Okay, no, it makes sense. I've seen similar kinds of issues in like rail and stuff like that, where surprisingly, hello, we also still use IBM for a lot of our, let's say, change control management, requirements management. So they've got a whole set of tools that just dominate rail. So everybody knows clear case, doors. These are very typical tools that are used in that space for managing the stuff, and IBM is the guy. And obviously there's the element that it's because everyone, like you said, in the industry is already familiar with it. So it's just, convenient. And then there's the part where it's tried and tested. So the interesting question I have in my head is, could we ever get to a point where a bank can run off AWS, as crazy as it sounds? And I understand we've got regulatory elements that say, okay, financial data needs to, let's say, be stored within the country under certain conditions that conform with, let's say, POPI or FICA and all the likes. But AWS does have products that are tailor-made for these kinds of government requirements. I think the CIA runs shit on AWS, the FBI, and I think the US government run things on AWS. So they do have products which I think can conform to some of these requirements. Could we see something going in that direction, or is it just a completely no-go?
No, we definitely can, right? It's not about the company that actually saving that product. It's mainly about jurisdiction. So right now we have a what do you call this thing? We have, I think, a center in Cape Town, the AW center in Cape Town.
Yeah.
So so a lot of banks now are using it because it's housed in South Africa, so they can do that. Right?
Oh, so it's already happening, right?
Yeah. So there's I think ABSA and FNB, if I remember correctly, they are using for some aspects of their business, they are using that thing. They're using AWS in Cape Town. So for us, it's like for reasons, it's like this. When you're building, when you're building a system, most of the time, like what you build on, it's mainly what you know, and it's mainly what you know, and maybe your the regulation that allows you. So if I come into the business, I'm a Google guy, and then I know, okay, cool, there's an office in let's say Mpumalanga from Google. I'll build everything on top of Google. That's if the cost allows, right? Mm-hmm. If not, then I'll try to find something
that resembles it.
Pretty much. So that's mainly what's been happening, I think. From a project standpoint, it's pretty much that. People maybe are not using it because someone in that tech team is not actually proposing it, or they're not keen on doing it. Simple as that. Nothing other fancy thing that you need to do. That's why I love startups. With startups, I have the power to propose a certain thing, and then obviously I need to think of the pros and cons like any other project. And then once everybody's on board, we go for it. Or I go full force on my own. I do an MVP. People like it, and then we adopt it as a company. We move along. So that's why I love startups for that flexibility to able to change something quickly without going through putting a 10-year plan and then maybe will only be approved 10 years from now.
Yeah, trust me, I've seen a whole lot of that in my career, where it's so obvious that doing X, Y, and Z, just tweaking things here will make it better, faster, and quicker. But it needs to go through so many different layers of reasoning. And the difficult thing is you have to communicate these values to the higher ups, and they either buy into or they don't. And there's all these other dimensions to it. But, okay, cool. Another thing I wanted to touch on is, okay, so we've got BankZero, it's the app, all right? What's happening in the background, banking-wise? Like, what is the architecture of South African banking? How do you guys speak to each other? How are transactions settled? What does it look like? The invisible world.
Okay, invisible world, huh? Yeah, there's a lot of stuff there. I'll touch maybe on two of them. That I'm relative. Remember, I'm new in this banking space. I'm not new in the fintech space, but then the banking world, I'm still a learner there. So I'll talk about what I know. So let's talk about the EFT rail. So for you to do EFT, right? Pretty much moving money from bank A to bank B. What you'll do, you'll essentially just make a transaction. And then your bank will take it and send it to a BankZero, right? Your clearinghouse. So BankZero, South African clearinghouse. I think it's the only one South Africa has.
BankZero.
So cool.
Are they like a government agency, a private company? What are they?
I guess. What is it? I think it's from a committee standpoint. I think it's just the heads of all these big banks running that thing. I think so. I think I've read something like that somewhere. But then it's just that the big banks having a committee, creating a different, like pretty much they're creating a different entity to be able to be the middleman for everybody, to make sure everybody is playing healthy with one another.
So are they sustained via regulation, or is this a private company? AKA, can I create my own BankZero and compete with them? Or is this like a...
Yeah, I don't think there's anything that stops you from doing that. From my knowledge at the moment, why we don't have anything that's competing with it, I don't know. So yeah, maybe something I need to look into. But yeah, right now, I don't understand why there's only one. Yeah,
okay, so it could just be like a monopoly thing, all right?
Yeah, just that thing to say, okay, cool, there's 5 big banks, and then their CEOs are part of the board, for example, and people are colluding and I don't know, politics and stuff.
All right.
Conspiracy, yeah. So, yeah. Anyway, so yeah, you have this clearinghouse. EFT wise, your bank moves money to them, and then they sort all the transactions that came through. Say, okay, cool, this branch goes to FNB, this branch goes to Absa, this branch Nedbank, this branch goes to BPS, etc. So cool. And then once they do that, then they do the whole thing of they hand over to the bank that needs to get those transactions. And then there's within that, there's the element of, instant payment, those kind of stuff. Mm-hmm. That make sure your money gets in very quickly. So obviously, for every transaction that happens in that process, BankZero themselves will take a cut. Obviously, they'll take their cut. They'll take a certain cut, but then if it's immediate payment, they'll take a bigger chunk. For this, why a bank will actually charge you for doing that process with them.
Okay, so there's actually an infrastructure cost. So this BankZero is somewhat like some kind of a private entity, because they're obviously charging and they basically making money to some degree. I don't know why I've never heard of them. All right.
You probably have. What do they call them? It's BankZero. I think it's AC. Let me see. Google. I see ACS. No, AC bank serve. Let's see what Google says.
Yeah, because I'm thinking they're like a utility company of some sort. But it sounds more like they are a private entity that's providing a service. Yeah, it's a clearinghouse. Okay, cool.
Yeah, it's a clearinghouse. It's a clearinghouse for South Africa. So yeah, I'm looking at the website. It's interesting. So yeah, that's that. And then they obviously, because now they do. Hey, I like saying obviously. I need to upgrade my English. Anyway, so when you do the clearinghouse, because then they're middlemen, they offer other products. Let's say 3DS and blah blah. But story for another day. Cool. That's EFT. Then we come into the card part, the card payment rate. So with card is a bit tricky. I'm learning card as I go along. So with card, will have the issuer of the card. Most of them are issuers of cards. So for you to be able to issue a card, right, you need to be an issuer. Then from an issuer, you have what do you call it? You'll have a merchant. Merchant will be your take a lot, let's say. You'll have a payment aggregator. Your payment aggregator will be your PayFast, your PayU, those kind of guys. And then you'll have your MasterCard, the ones that forgot what's the term for it, but there's MasterCard or Visa or whatever that you want to use around the world.
I guess they're the processors, I think, payment processors.
Yes, yeah, but there's a bank term for it. I forgot what it is. There's those guys who make sure like all our transactions go through them, and then they route to us. Like for example, if you make if you're swiping at a bank. If you're swiping at you're trying to buy something at e-commerce. Let's do like physical swiping to make it easy. You go to you're trying to pour petrol and then you need to pay. You swipe. After swiping, what's going to happen is they're going to go to MasterCard. Let's say if you're using MasterCard as a bank or Visa, Visa will call the bank. And then when they call the bank, pretty much we need to do the whole thing of checking, do you have enough funds, et cetera, eligible, blah, blah, those kind of stuff. It's not fraud, et cetera. And then once you do that, we tell them, and then the count goes back to the POS, the thing that the handheld thing.
Yeah.
And then it tells it, okay, cool, enough. This person has enough money, et cetera, then you're eligible, and then cool. That's where your transaction goes through. So pretty much that's what happens in that 30 seconds. It's people go in the internet, go to MasterCard, from MasterCard to the bank, and et cetera. So obviously you can understand latency and everything else matters from an engineering standpoint. And then if the internet sucks in that neighborhood or where you are at that point, the whole system breaks down. So internet is very important in South Africa or in everywhere to make sure that things work properly, and for us to be, I'll say, to be part of the first world. I don't know when we're going to get there, but then for us to get there, we need our internet infrastructure to be proper, because all these things that we build on top of are heavily relying on that, unless if we want to still do things manually. So that's why for banks, I'm going on a tangent now, but for banks, what they will do, that's why they'll have branches, because of all these other things are not reliable. Maybe let's say in a particular area, a rural area where there's no proper internet, they need those kind of stuff. And obviously, from an education standpoint, the people are used to having an internet. People are used to having a branch or having an ATM. So those kind of stuff is just a psychological thing that people are used to, and that's why in South Africa a lot of things are not moving as fast because of like the internet infrastructure is bad. But story for another day. So yeah, those are, I guess, the two ones that I kind of have an idea of how they work in the background.
Okay, so it's safe to say then, because there's a key thing you highlighted there, which I think, at least from an engineering perspective, I can lock into, is that there's a correlation between the physical banking infrastructure or the traditional banking infrastructure and your ability to disrupt that using obviously internet. Hence, BankZero, in your context, you've obviously seen that there's enough, the internet is mature enough for you guys to run a bank on 100%. Obviously, as you know, it means you're limited in how far you can grow, meaning there's certain spaces you guys will not be able to touch. For all the talk about, in 2021, Gogo has now a smartphone and can do transactions. I wonder how real that is, actually. I don't know if you guys have done some kind of, once again, without delving into company elements and IP, or maybe I can ask it in a general term. What is the market size for a digital bank in South Africa?
I don't know. I don't know, actually. I don't know. But then I'm just thinking about it. I think it's big enough, right? It's big enough because of, like I said, the smartphone situation in the world. Everybody almost have a smartphone right now. Even your Gogos, they have a smartphone right now. Even the more infrastructure-wise, your Vodacom and all your ISPs and whatnot can have proper internet across the world. The more you reach more people, right? So, which is an interesting aspect to it. So, for now, if for a normal bank to have a branch, like for them to scale to, let's say, rural areas, they'll typically build a branch there.
Mm-hmm.
But then for digital banks, they just need you to be able to download an app. If you can download an app, you're done. You have a bank, you have an account, you're good to go. So getting like reaching those people, it's much easier. Even though, yes, now and then, obviously, we know the pros and cons. Internet might not be working then, but you need your money. What do you do? Etc. Story for another day, from an engineering perspective. But yeah, you can reach more people. It's like the Take-A-Lot concept. With Take-A-Lot, it's competing, obviously, with your micros and whatnot. And then the main thing about them, everything is online. That means they can have as many resources or as many products as they need on their website without having them physically in the warehouse, for example. So the reach is much bigger. Just that the only stopping everything from moving quite fast is the internet. I'll say it's the internet and the education.
Okay, so which is actually maybe something I can poke on, like from BankZero's perspective. Like, are you guys planning?
No, I'm not speaking for BankZero. I'm just speaking my experience. Stop saying for BankZero.
Okay,
I don't know. Yes.
Sorry. Well, okay. In the context,
I'm not a spokesperson here. Yes, I'm not a spokesperson, so I don't know. If you want specific BankZero stuff, go to the CEO. Let's talk about my experience.
From your experience, the key thing is that question of fintech. Let's maybe be generic. There's that relationship between doing something new and obviously having to somehow educate your consumer base about it, because your consumers are used to certain things and then you're coming in. So, and as we spoke about last week, investing in infrastructure, missing parts that are in the infrastructure, something even like education, is quite expensive for a startup. So what are your thoughts about how that is bridged when you, let's say, get into fintech, where someone is used to going and seeing and getting a statement and getting a slip and manually doing the stuff, and they've built a psychology of trust around that process, to now telling them that, hey, I've got to drag money from one point on my screen to another one and it's all safe and gone. How do you educate the consumer around redefining trust, specifically when it comes to money and the products that they use?
How do you change the way people do things? How do you disrupt the status quo?
Yes, that's the hype term, yeah.
Yes. How do you do that? I'll say you first need to get people interested. That's the major thing, right? Before getting people in, you need to, from business standpoint, Fabrice, you just need to get your target base. Focus on your target base, what you can control. The other stuff, if there's extra on top of that, great, right? But then if your target base is, if you're looking at South African stats from numbers, what is that report? I haven't checked the
digital report thing. They usually produce some interesting numbers.
So from that, if you look at that report, it will tell you the growth of smartphones in South Africa. By just having that alone, okay, cool. If anybody who has a smartphone, you can start there. That's my target point. Okay, cool. Now I'm thinking, okay, I can get to any of those people, but now the problem might be, let's only, for now, remove the old people. Focus on the young ones, right? We're assuming it's the ones. Now, the challenge now becomes, how do you move them from their comfortable place to you, right? So what moves somebody, then you start dwelling into the question, what moves somebody from their bank to a different bank? Then now to do that, not a lot of people actually move banks, except for your Bonganis who have bank accounts everywhere, obviously from a strategic investment standpoint, right? I do that. There's certain reasons why I do that. So, but then a normal person, like AKA Fabrice, they don't do that. So now we think about, okay, how do you do that? What I can think of right now is give them something that will definitely force them to move. In South Africa, Besides, okay, you have the cost element. If you can give them something cheaper, best case, if it's free, go for it, right? But you need to make sure that they get everything that they need to get on the other side and a bit more. Not even slight more, but a bit more. So I'm looking at, now I'm just, when I said that, because BankZero mentioned that, okay, they have one thing I like about them is it's a lot of stuff, but then from a product standpoint, for now I'll mention the business aspect of it. So for me to open a business with any other bank, it's difficult. Number one, the onboarding aspect of it is difficult.
Oh yeah,
right.
Yeah,
that's a major part of it. We know, like, businesses are very, very in pain when coming to how to do admin wise, right? How to onboard a business, because now you have to be physically go to a bank with all your signatories and your shareholders.
Yeah, you need all your directors, and it's a nightmare, especially for a startup. Like, as you know, we had the experience of being remote, and you've got someone in Cape Town, someone in whatever, Joburg, someone flying around overseas, and you now want to register a business. And it's actually ridiculous that in 2021, it's hard to do that. You all have to physically be there in the bank.
It sucks. So that's one element. It's a pain that needs to be solved. And then the other element of it is the cost, which I talked about earlier. So business banking, I don't understand why business banking is more expensive than a normal banking account. It should be, but it's not. It's expensive. But then what more do you actually get from it versus if you just open a normal check account and use it for your banking account? I don't know. So they'll probably, banks is pretty much, banks are businesses, so they're trying to make money. When they try to make money, they'll create all these products, and then probably 90% of a lot of shit that you get pushed to for a bank, you don't use. All these tier 1, tier 2, now you're currently let's say on a black card.
You've got a black card now, like, I was so ridiculous. The other day I actually said, let me try and join the black card crew, because it felt like, okay, Then I realized that, oh my God, I'll be paying like, what was it, 450 Rand just for that card. And I was like, what the fuck? That's like a whole subscription. That's like a Netflix subscription. That's like all sorts of shit. I'm like, no way, I'm not doing that. That's just ridiculous.
Another thing, if it matches your investment philosophy and matches your lifestyle, then that's great. That can work. There's people, for example, if you have a certain class, let's say a black card somewhere, and then it gives you rewards and points and whatnot every time you travel, like there's people who travel 10 times a month. So they make a lot of money, cashbacks when they actually doing those things. If it does that, cool, great, it works for you. But then for a majority of people, why would you go and move from a gold account to a black card, but nothing changed besides your income? You don't do anything extra. You never used the benefits that you get from your silver card or gold card, and you go to do a black card, and then it costs you way extra. Maybe sure from I guess social what's the word for me? Social
status,
yes.
And everybody gets to know what your income bracket is now. All right. So unless you do the Capitec thing. That's what Capitec did. All right. But I guess
just
to come back. So obviously, okay, cool. So So there's fintech and there's all these dynamics. The last thing I want to pick your brain on is, what are some of the exciting things you're looking forward to in the fintech space? You've done fintech at Takealot. You did the crypto thing, Crypto 20. Now you're obviously in the bank space. Where's this all going in like 5-10 years from now? I've heard of things like open banking. We obviously now, as developers, we have access to all the APIs, so we can build better user experiences, better products. There's DeFi, aka blockchain, bringing control back to the human, to us, all that jazz. What are some of the key things in your eyes that you feel are interesting?
We'll talk about that a little bit. You spoke about control. One of the major things I like about the BankZero offering is the whole concept of control, right? Where every transaction that leaves your account, you authorize it, and then you can block access to something. If it was, let's say, it's been chowing your money, and you can block it, which is a big problem right now in South Africa, which I don't understand, obviously, because I'm not part of their status quo in terms of banking, the original banks, blah, blah, blah. But then for them to be able to like come out and actually say, these rogue debit orders that comes out of your account every month, they don't know where they come from, who authorized them, but they actually charge, taking money. That should be fucking illegal for this.
Yeah.
Right? It should be legal.
Yeah. So what are you guys doing differently, all right, with regards to debit orders?
So debit orders, there's two elements to it. There's South Africa, I guess, regulation-wise, they've introduced this thing called DebitCheck or whatever.
Okay.
The DebitCheck thing, the system. It's like with banks, my understanding right now is, okay, I'm going to be all over the place, but it's fine. It's a podcast.
Yeah, I guess
I'm going to be all over the place. With banks, like the major thing is somebody proposes something. Mm-hmm. And then after proposing it, let's say Bank A, it's like a cartel, essentially.
Okay.
I'm not sure if that's true, but it's like a cartel. You have somebody who's part of, like, there will be like different banks, obviously. And then the one with the majority push or stakeholder or whatever, they'll propose a certain project. And then maybe you have 2-3 years for the banks to implement it. So if you're very small, you don't have influence, you suck. Like a lot of things that you propose won't actually happen from a regulatory or systems way of doing things. Because for them to introduce a certain way that all the banks are going to use in the same way, they all need to agree that, okay, this is how we're going to do debit orders. okay, banks, we have this problem. This is how we're going to solve it. All of us need to fall in this system. We need to all agree.
Wow.
That's one thing. It's like any other system, that's how it works.
And it explains why they always have the same products. All right.
Voila.
It's basically, they always have the same products pretty much. All right.
Yes. So one thing I like about BankZero, it's like one of the things that made me jump into there is because it's a startup. I enjoy startups. I enjoy building systems from ground and going forward. Is the whole concept of disrupting the status quo, doing things slightly different or completely different to what things are and still get away with it, right? Obviously, from a regulator standpoint, you might play them certain aspect you might play within here versus there, but then other things you can go wild. And instead of implementing it this way, let's implement it this way. And then let's see what happens. If we fail, cool, we'll fix it. But then the main thing is they trying, what I'm seeing with BankZero is trying to introduce certain concepts that people are steadfast on, but then they're not necessarily helping them. Let's give you a different perspective to this. Instead of giving you the same thing that's been given to you for the past 20, 50, 100 years of banking.
Okay, let me play the devil's advocate because we know it's easy to bash banks. Banks are evil,
Yes, I don't like banks. I don't like banks, Fabrice. I don't like banks, Fabrice. I've told you they're slow. They're slow.
Be careful. You might want to, you might be applying for a bank one day. So, but my point is that, like, let's flip the problem. All right. So you've got the problem of them not innovating, operate like a cartel. What if the problem is reframed to a problem of like safety, regulation, compliance? And I read an article I've put in I think you sent it to me, about what is now being called RegTech, all right, regulation technology, all right, which is now obviously trying to optimize the ability of guys like the Reserve Bank, FICA, all these guys, even ICASA, in their capacity to regulate better, more efficiently, but obviously more specifically the new stuff. So maybe the reason why we can't move as fast, or the banks can't move as fast, is because they need to find a way to keep things safe and regulated with the new disruption that comes in. So here's my challenge to you, is maybe the problem isn't as much the lack of willingness to innovate, but it's the lack of innovation around the regulation elements of it. If we have RegTech catching up with FinTech, you might find that could accelerate the willingness of the cartels to get into the space, because it's all about control. If you build better tools of control, all right, it also opens up more room to allow more noise to happen.
Let me give you my typical shots every time we talk about this conversation. I'm always
okay.
I'm always thinking the problem is the fucking management, Fabrice. The way you as a leader, the way you lead reflects what's happening on the ground. Right? That's my always go-to answer towards that. What I mean by that, if we have the Reserve Bank that's regulating a lot of stuff, obviously there's a lot of committees or a lot of organizations,
working groups and all that crap.
Yes, they have a lot of them. But then for now, let's focus on Reserve Bank. If in the Reserve Bank, the guys who are pushing paper in the Reserve Bank, the guys who are making decisions in the Reserve Bank are not people who are open. I'm not saying they are, but then I'm saying if they're not open to pushing a certain narrative, nothing will happen there. If they are on that safe stand, okay, things will move slow. I understand, yes, from a stability standpoint, they're also thinking, okay, we need to, like, for something to be implemented will probably take, they normally have like a 6-year program for things to change. They will introduce a certain thing, and then within 6 years, they try to make it happen. Obviously, they understand that there's banks which are small who can't change their software to suit them. And then they also understand that the big guys they don't like changing the business model. So that it's a challenge. But then if management from, let's say, reserve banks take us a very heavy push in technology and making sure regulation pushes things quicker. They can do that. They're not doing that. So maybe because I don't understand, maybe we see from that top level, but then I've been in management in different places. I know how management works, right? Politics wise, I know the politics of it. Maybe some people are like, this is not worth it. Things are working as they're fine. But then when you're thinking with that mentality, you never get to break or never get to do anything that's fun and great for the country. You just moving with a small, stupid pace. Sometimes you just need to go a little bit and things start moving, you know?
See, now, Bones, you're starting to sound a little bit too much like me, all right? Usually you're the sober guy who's promoting, regulation, stability, reliability. And maybe I can come back and repose it in a different way. You've got an ecosystem where you've got the regulator, you've got the banks, today who are the most mature in complying to it. Hence, there's that monopoly with a lot of these regulated spaces. Then there's the little guy, the startups, the fintech people, etc., trying to come in. Now, you can't come in and compete with the banks because on many layers, the regulatory framework is tailor-made to keep their dominance, which is the monopoly and the cartel mentality that we see. Now, I'm trying to say, okay, forget the banks. They're like gone. If I want to disrupt the ecosystem, maybe more innovation at the regulatory part, all right? Such that these regulatory parts can make, for lack of a better word, more innovative products, less, I want to use the word less disruptive, but less unsafe. I mean, Bitcoin, for example, and blockchain, there's a lot of scams. I just heard about Poly Network that just got this massive hack, all right, where guys came in and stole so much money. So there's definitely a risk with like startups in fintech in terms of scamming people, etc. So if you have more innovation at the Reserve Bank that can allow them to, let's say, better monitor some of these new risky kind of technologies, then it means that you can maybe step in and start competing more effectively with the banks. Because let's say, for example, the Reserve Bank, or for lack of I'm not sure who says, okay, open banking is now the standard. Here's an API that we expect all of you guys to conform with. These are the different ways you should expose your banking products and infrastructure to everybody. Now, immediately what happens is that the fintech guys can move faster and create better products. The banks will obviously still be, thinking about it, thinking about their business model. I mean, honestly, if we're really accurate about it, what they're likely to actually do, as we've seen with guys like Luno and a lot of these so-called fintech guys, a lot of them are actually backed by banks, or they started as a bank side project. All right, so there are some smart people in management who at least understand that they need to have their hand on their pulse in that dimension. But my point is that RegTech, we don't hear enough about RegTech. Maybe RegTech is the one thing that can change this relationship. Getting the Reserve Bank to upgrade their systems, getting them to use more innovative models, and that can open up a new spectrum of possibilities for startups to compete. I don't know if that makes sense, or am I still dreaming?
No, it does. But then me and you, as we're saying the same thing, just we're saying it differently. I'm up for it. I'm actually saying exactly what you said, which is if management, that the people who make the decisions, if they can focus on a certain element. If let's say they say we want to, the way they're saying we want to have innovation, we want to grow small businesses. If Reserve Bank, from a let's say payments perspective, if you only focus on payment, if you now create regulation in such a way that it actually pushes, or it sort of pushes that narrative,
Yeah.
things will happen, because now small guys now have to piggyback on other
Big
banks
guys.
to make sure things happen. You can't do anything in that space without having a bank on board. Nothing can happen because you need their banking license, you know?
Mm-hmm.
So for you to, let's say, for you to a payment aggregator, you need to now be able to talk to your net bank, your APSA, to be part of your system. So if they say no, you're not doing anything. You need them. Because of regulation says you probably need a banking license. You don't have it. What do? You have a relationship with those guys, right? So if they can tailor-made create a fintech specific regulation that will sort of accelerate that aspect, boom, it will happen. You'll see it in, I think India has something similar. They created they created regulation in such a way that you don't need a bank for you to create a payment gateway, for example.
Okay.
Right. So you can do it without them and then it works out. You can maybe whatever, however the model is. So those things are there. It just South African context. I don't understand fully, obviously, the context why it's that way. But then all these big guys are the ones you have to kiss ass to for things to start happening.
Yeah,
as a small bank, from an innovation standpoint, it sort of cripples it, or you probably need a lot of money for you to be able to do things in South Africa.
Yeah, and the reason I'm nailing this point is it kind of pegs into some of the stuff I was looking at this week. So I watched a debate between Peter Thiel, who is the PayPal guy. You know, he was CEO of PayPal at some point. Elon Musk, that whole cartel of people invested in. He was the first external investor in Facebook. Gave them, I think it was $500,000. All right, and I think he still sits on the board. All right. And obviously he's notably famous for being a Trump supporter, conservative, and yeah, very, very deep philosophical thinker. Then you've got Mark Andreessen, all right, who is obviously also a big shot. He's got this investment VC fund that he runs, the Andreessen Horowitz. I think him and Ben Horowitz are these two big guys running it. Long story short, they were debating this question of progress, and the globalization topic came up. And to what degree are they seeing technological innovation happening outside of Silicon Valley, aka you and I and the rest of the world? Now, surprisingly, Thiel was very not so bullish on it. He felt like a lot of the core fundamental breakthroughs are still happening in the Silicon Valley space. And I liked Andreessen's answer. And he came to this question of regulation. What they're seeing is that there's a lot of progress happening in your, let's say, digital spaces, consumers kind of like spaces, smartphones, televisions. We've seen the growth, the big numbers, the valuation. We spoke a bit about it last week, why certain software companies will scale faster versus hardware. And then there's these other products like banking, like insurance. Now, insurance is probably one of them too. Housing, education, which are very regulated, and they're not innovating and moving as fast because of regulation. So the hot point that he mentioned is that one of the interesting things he's on the lookout for is regulatory innovation. And then he sees regulatory innovation in other economies as an open gate or as an accelerator to the potential of these ecosystems becoming the new frontier. So obviously that for me is what I think I kind of like stuck on, and I felt like that's probably the one thing that can change the tides, is having a regulatory environment that is innovative, like you said with India, that is going to be willing to take the risk to allow more products to come into that space and basically disrupt.
Yeah, so what do you mean by regulatory innovation? Explain that concept to me. I think I'm not understanding.
No, I think the basic fundamentals is that depending on the rules, different things are possible. All right. So what that means is that if you can obviously change the rules in a certain way, because you must remember the point of regulation is that you've got these fundamentals. You need to protect consumers. You need to create a safe environment for things to work. in a stable way. And obviously regulatory elements are controlled by government. So you've got things you're optimizing for. You're optimizing for lack of a better word, safety, functionality, cohesiveness, etc. And then you're also optimizing for growth. You're trying to create an environment where products can move. So what we are seeing is that because of politics, regulation is used as a way to somehow control markets and in some cases stifle innovation. So if you've got like these two extremes, it's leaning towards over-regulation. So regulatory innovation is basically how do you basically allow more innovation, but still obviously keep the fundamentals of safety and all that stuff going. And obviously you have to go into examples of it to think about it. Let's say if you look at something like crypto and blockchain, it's more than just saying, let's allow more blockchains. You need to now, obviously, not just from a policy perspective, but even from a technology perspective. So you need to build tools that can empower your regulatory agencies to, let's say, track better matrices in terms of financial movements. Maybe, for example, one of the papers I was reading at, getting them to, let's say, use machine learning as opposed to post-analysis, which is after they've got all the transactions, they've got, smart business analysts and who go in and try and find trends of what's wrong after the fact. And then, let's say, respond afterwards. They can, let's say, build more automated mechanisms that can, let's say, pick up, let's say, bad transactions or bad trends in the economy as a whole. All right. So there are definitely better tools that regulatory institutions can use that can enhance the ability to regulate. And when they are obviously empowered in some layer, they then can allow more risky things to happen, for lack of a better term, from an innovation perspective. So if, for example, the Reserve Bank or SARS had a better fraud detection system, real time, with some nice fancy machine learning model, like with an accuracy of XYZ that can detect any form of crypto fraud. What that means is then they're like, okay, cool. We're confident that we've got a framework to analyze fraud at scale. Let Bitcoin go. Anybody come in, let people buy and sell with Bitcoin. So you can see now where the problem for me becomes interesting. It's about innovating at the regulatory point of view. All right, because if you can innovate at that layer of the call it infrastructure stack, all right, or of the ecosystem, all right, you can unleash more innovation for other players to come in. And so I think that's where I feel so-called emerging economies like South Africa can definitely get an upper hand. And we talk about things like state capture, which we know has always been there. All right, aka the non-beneficial relationship between business and politics. So obviously we know then that companies like banks lobby to get their policies in place.
But then for you, let's talk about that one. You know me, I like going like deep in terms of like talking from what would you do? Rather than just talking about philosophy, blah, blah, blah. I don't understand philosophy. So you're the philosopher. So
well, there's no philosophy there though, but it's fine.
Here's the problem. Here's the problem, right? Problem is, right now, you, Fabrice, you are a regulator. You are SARS. Not SARS. You are Reserve Bank.
Yeah.
Right now, what would you do to make sure that crypto is regulated? Right? Let me just give you insights, just slightly. Every transaction that happens in South African banks gets recorded to them. Right? Mm-hmm. They know about it. They know Bongani made a transaction of this much, blah, blah, blah. Every, let's say, external transaction, Forex transaction, they know about them. So they get that information and then they do stuff with it, right? Mm-hmm. Whatever they do, AML, whatever the case, they have that capability to do that. So my suggestion I'll say, instead of like right now, I think the recommendation that they made to the world or to South Africa, I guess, banks or payment players in the game is do not allow transactions. Do not allow somebody to actually buy a cryptocurrency that's coming from overseas, for example. Do not use a Binance. Do not use all these external stuff. Only use local merchants.
Yeah, because those are the guys they have a backdoor to when they need to. Yeah.
Yes, right. And then what they'll do, as we saw previously, I think 2-3 months back, the SARS guys went there and they actually tried to get certain information from these people. Legally, are they allowed to do that? Maybe not. We don't know. But then,
all right,
yeah, right. But then, you as an entity, you can say no. That's like, I guess for now, I'll give you like a few things that you can think about on how you, Fabrice, you're part of a committee at Reserve Bank in making sure people can actually buy crypto from wherever, like regulate crypto without actually killing it. What would you do?
Yeah, I think they obviously I'm not an expert in the space, so I can only come over it from a very ideological, principle-based analysis. So one of the key things I know with a lot of these regulated institutions, and I'm sure it's the same with finance, they are very good at post-detection. So SARS will have all the data that you say the transactions coming in, and they'll have their detection system, which will typically be an if-else statement, rule-based model. All right. Now, obviously, as we know, scams innovate, they vary. So the detection system is always behind the latest scam. So it's coming after the fact. So already from that layer, you can innovate to maybe be more predictive. That means you'll need to delve into things like machine learning and building more basically building models that can give you a faster return time in terms of responding to nefarious behavior in the markets. So that's like a typical kind of like very basic view of what they can do. But I think when it comes to crypto specifically, there's different variables you're optimizing for. All right. There's a reason why people are on it. They want to control their financial life. They don't want to be reliant on a bank. So they want decentralization. But because you're in South Africa and we've all subscribed to the social contract where you have to pay tax, there's a limit to this so-called independence. So what that means is that you now have this balance that SARS or whoever, SARB needs to walk between I need to regulate you, but I also know that there's this level of financial sovereignty that this product involves. So policy-wise, there's all sorts of magic you can do. Technologically wise, is there a technology that can allow me to regulate what I need to regulate about you without being intrusive, but yet still maintaining your financial sovereignty? That's a technological question, because now then you start to ask yourself, what technologies exist where you can validate that something is true without necessarily knowing what the data is? So you've got things like zero-proof knowledge mechanisms. You've got things like machine learning on the edge. This is a tangent, for example, that I'm getting on, where you now want to get to the point where instead of getting data, obviously going to the cloud, and obviously the cloud being the central point of failure where all the information is kept, and you do all your fancy analysis and you send the results to the user, data does not have to leave the user. You can embed models and techniques that can check what you need to check and give you the results that you need from a regulatory perspective. So obviously it's still very high level, but that's what I would do if I was a regulator. I would look at the variables I'm optimizing for and try and invest in building technologies in-house that can help me walk that balance in a strategic manner. And so that's obviously, that's not easy, all right? But I would say that even one step of innovation in a RegTech, I think produces like 100x results in the open market from the ecosystem perspective. So even a slight movement that they make, I think, has massive repercussions in terms of what becomes possible or not. And I think that's kind of like what I think can happen in South Africa is just start hiring, if you're Saab, you see that, there's this nigga called Bongs who's, worked in crypto. He's worked in BankZero. He's seen what the infrastructure looks like. Get more of those people in their teams to innovate from a regulatory perspective. All right. How do we build better tools to implement the kinds of policies that we want? And we can also say that this is maybe where the policymakers need a bit of slack. Obviously, they're corrupt, and we all know they take money from all the big guys. But even if they wanted to do good, they're not as technologically empowered to maybe achieve some of the things they want to do. And that's why I think that RegTech could be an interesting thing to keep an eye on. And I mean, if you're a startup, I'd say this is probably a very interesting space to get in. How do you build better tools to help regulatory institutions regulate better to unlock more value in the ecosystem? I take something like ICASA. They regulate all wireless stuff. So I know, for example, as a IoT startup, I can't just build some shit and put it out there and put it on the consumer market. ICASA has to regulate it. They need to take it to their labs, make sure that you're not emitting signals that are beyond the threshold. They need to make sure that you're respecting all sorts of jazz. All right. And that's great and fine. But obviously there's cost to that, turnaround time. Their testing could maybe not account for the latest interesting thing you're doing. Let's say you're building some software-defined radio solution, which doesn't fall into the traditional definitions of wireless operations and all the likes. So it could be interesting for ICASA to invest in better ways of regulating wireless devices at scale that can make it quicker and faster for startups to get into the space and get their products in the hands of consumer without having to wait this. And it's a nightmare. I remember experiencing it with our trains at Gibela, where we obviously had I can't speak details, but we needed to get one of our devices certified. And it took a long time. Like it took, almost a year plus to get that done. All right. And there's all these different dynamics, all these different rules. And so that's obviously is one of those cases where if a regulator innovates faster and quicker, they remove friction, especially for startups to come in and show value to the market quicker. All right. And that's why we see a lot more innovation and scale happening in unregulated spaces as opposed to the regulated ones. So I think for me, that's one part of the battle that can be interesting to poke at. The cartel, state capture, political part, obviously that's hard. To some degree, it's always going to be there. But I think if, there's someone in management at Saab you've got the same strand of thinking that you have, these are the kinds of moves that they can make, is basically get the smartest people, pay them everything you need to pay them, and get them to build better regulation tools. All right, that can unlock the ecosystem. And we know what happens with these things.
Fabrice, I'm trying to look at, I know it's bad to do it, but then I'm trying to think about other parts of the world where they've done something similar. So you look at the typical use case is the US. With the US, you've got a guy like Obama who came in and is like, oh, shucks, there's these guys called the what do you call these things? The internet guys or the software guys who just put them in a room. Yes, put them in a room. They can do a lot of funny and interesting stuff. So us saying the bank, the government is slow. Why can't we just get those guys on board and make our system better? And then you've got your likes of Donald Trump, who like the easiest way to do this is to deregulate. So where are you? Do you want to deregulate? Do you want to still regulate, but then in a in a more innovative fashion. We know that that's a bit of difficult to do because then you have all these players that you need to make sure they come to the table and then they agree with whatever you say. So why don't just deregulate? But then we see the issue with deregulation is that, as we know,
monopolies.
Is you get issues like your VPS or VBS, like the bank that child people's money in Limpopo. So that's why now
was it true
the banking license, it's more difficult than it was back then. So where are you with that kind of thinking?
No, I think there's definitely two different discussions to have. There's a discussion of overregulation, and let's define some terms. Overregulation means that you have a rule that does, because you're trying to make things, for example, safe. But you have a rule that is not necessarily needed to be there for safety to be achieved. Okay. So in principle, overregulation is having rules that aren't necessary. All right. So the principle is that this rule is not needed for safety to happen. And the side effects of that is that it prevents, let's say, innovation, or it, in some cases, it even stifles competition, all that kind of stuff. All right, so we can get into the free market politics and the debate around that, but I'm generally a fan of free markets, aka, in general, what we've seen throughout human history, the less regulation you have, the more innovation and progress you have in the markets. One of the side effects of this is monopolies, all right, that you have certain players that emerge and obviously start swallowing up other players, but then in principle, that's where the only role of government should be in, is to prevent monopolies, to prevent these nefarious actions like collusion, all these other things that we know about. All right. But generally, obviously, if you go into your left-right politics, the right is pro deregulation because it's pro more free market competition, etc. And the left is more regulation because it believes that, empower government more to build better programs to help people. Now, we know there's bullshit on both sides. And so in practice, what I wanted to separate was the idea of overregulation, meaning regulation that doesn't need to be there, versus the idea of more innovative regulation, meaning where regulation is needed, all right, how can it be done better to unlock more value? And I think there are two different concepts. In the one case, you have a rule that actually needs to be there. But because the rule needs to be there in that kind of like fashion, it also prevents things from happening. So I'll give a classic example, automotive, where you need to demonstrate that your car is safe. Meaning from a software perspective, you need to demonstrate that this car can never enter a state which is unsafe for the driver or for the other drivers in the environment. So from a testing perspective, you need to show from your test coverage needs to account for every single piece of code you've got there. And you need to demonstrate beforehand, before being given a safety license or whatever, that you have demonstrated that this thing will never enter an unsafe state within certain margins, etc., and the principles around that. Now comes machine learning and autonomous driving, where you inherently are building a model where, obviously, as we know about machine learning, especially with neural nets, it's essentially a black box. All right, you don't have the ability to, with a certain level of certainty, know what this model will do. You just know that given the examples you've given it, it performs at this level of accuracy. All right. So you can't fully demonstrate all the states that your software will be in. And hence the regulatory environment right now, particularly in railway, what we call safety integrity level 2, you can't use things like machine learning. So now regulatory innovation would be, okay, cool. We've done the experiment with machine learning. We've seen certain elements. We've dug deeper into the question of explainable AI, meaning how do we get deeper into these models and try to understand what they're doing, see the confines of their limitations. And we have a model that we think we can work with. And so we then go and we upgrade the regulation to say, okay, cool. We can allow you to have AI under these conditions. If you can demonstrate that your software can be explainable at this level. All right. So maybe we define different levels of explainability. And we say, okay, cool. We will allow autonomous driving cars, which are explainable at, let's say, level 3. All right. And then we unpack what that means like. What does that do? It means that now autonomous driving or autonomous railway can come in, startups can come in. That for me is what I call regulatory innovation. All right. Versus the concept of overregulation, which is a different kind of more economic, political kind of thing, which can be debated in so many different like ways. Because you can argue easily that, we don't need regulation in healthcare. The free market can decide. And someone can argue when you leave it to the free market, people will die just because they don't have cash. So we need a way of regulating what doctors charge so that they don't overcharge. Someone should not die because the doctor decided, today I'm going to charge R1 million for operations, and then tomorrow he can decide to charge. So we want a framework for that. And so the debate of what is overregulation, what is underregulation can be pretty complex. But my premise is that where regulation is needed, all right, and you can see that different things can't happen because of the regulation, we can innovate around the technologies that come, meaning this technology is not covered by this regulation. All right. How do I evolve the regulation? All right. Innovate on respond to the innovation. So I guess it kind of makes the regulation more response to the technology as opposed to itself being, let's say, inherent, which essentially is needed because regulation doesn't exist in a vacuum. It's always a response to something, a framework. So, yeah, I don't know if I think I've rambled a bit there, but my point was more that there's a difference.
Fabrice,
yeah,
like one you mentioned, explainable AI. One thing you know about explainable AI is it's a post-mortem situation. So it only explains what happened and how a particular algorithm got to that position. It won't say this is what, like it won't explain, it won't tell you what's going to happen in the future. But once something happened and you run through your algorithm and it can explain, okay, cool, you were in here because let's say all your vector variables, it will tell you this variable was 5, this variable was 4, this one was 3, this one was 4, etc., etc. Hence why you are in this state. So that probably is not one of the major points, but I just wanted to correct that the thinking there cannot be applied to what you're talking about.
No, true. I mean, that's probably why it still is an open question. But to obviously push back on your notion there, in as much as, of course, it is a post, all validations, even today, is a post kind of activity. It's not 100% predicting what will happen, but it's more drawing a profile of this is what your software looks like. It's within these confines. Because remember, all of these things need to be also understood within a certain statistical boundary, all right? Meaning, like from these tests that I've done, it's not likely that this train will randomly just go from 100 to 300 kilometers per hour, all right? And we've tested with under so many hours, et cetera, et cetera. So a post-mortem model around AI could maybe be better used to maybe draw a probabilistic boundary of where the model lives within from a safety perspective, meaning between being able to just randomly bump a person on the sidewalk to, let's say, being able to slightly not be able to decide between a little boy and an old man. Where does it sit? Can I have a model that can give me something that's measurable that I can use to judge other models? All right. And then once I have a framework within that space, then, because at the end of the day, regulation is all about frameworks. And at the heart of these frameworks, there's some kind of scientific model that you're trying to build about reality and your ability to predict it. And obviously, it doesn't have to be 100%, but we need to build one that exists. And that's what's more controversial about regulation is just because there is a model, just because there's a rule and it's a lot of people have agreed to it, it doesn't necessarily mean it's safe or good. It just means that a bunch of people decided that this is good enough. All right. And that's where obviously the challenge and the disconnect comes in. When startups move, obviously the regulators aren't up with the program. They need to catch up. They need to build frameworks to assess safety, reliability, all these other different things. And once the frameworks are there, then the startups can obviously flourish. All right. So I guess with AI, obviously it's an open question because, I mean, by definition, obviously the logical thing would be, do you build AI to analyze AI? All right. Do you build machine learning models that can learn how safe other machine learning models are? So there's all these rabbit holes you can get into. But that obviously emphasizes my point, is that regulators need to innovate. They need to start having almost like these startup-y sandboxes within their organizations that are constantly trying to innovate at the same pace as the startup guys, which means they need to pay them a lot more money. You need more investment in RegTech. And that's what I would probably like, if I ever got to speak to Peter Thiel or Mark Andreessen, this is what I'd say, is that maybe you guys need to invest more in RegTech startups, bump up the evaluations, incentivize startups to do more stuff in that industry, because in the long run, it unlocks, because they're going to reach a ceiling with where we're at. At some point, we're going to have enough social media apps. We're going to have enough Ubers. We're going to have enough consumer stuff. In fact, I already feel like it's too much. And you've got these other industries which have not been unlocked. They are big, they're expensive, and to a large extent, they actually are stagnating and are actually sucking up all the GDPs that countries have. Look at things like education and all the likes. So we need a way of starting to chip into that world. And I think RegTech is my view of where you can start chipping into that world. And stop seeing the regulators as the points of failures, but start seeing them as the enablers of the actual ecosystem and empowering them.
Welcome, Fabrice. Welcome. Welcome. It's been a journey. You're finally here. Welcome to embracing regulation. Like I said, regulation is inevitable.
Not true. It is. But you can tell that there's always arbitrage between a startup move and so these arbitrages obviously are great, but they also do have bad effects. Like in crypto, we've seen, if you can quantify how much money people have lost in crypto, it's a lot. It's not nothing. All right. So it means that like but at the same time, you know, is it worth
it? But then they're doing this, I think, with crypto. Like, and I know you're jumping on a different topic, but then with crypto, a lot of people are losing money every day, like a lot, with these so-called influencers, where they're pushing or shielding a particular coin every second day. They're losing a lot of money. How do you fix that? We know that, okay, educating your masses, meaning the people on the ground, educating them to tell them, okay, cool, this is the way to invest. Don't invest on something that you don't understand. Just these stupid things, right? Do your DD and whatnot. We know that doesn't work. 100%. Even the most educated investors get into those kind of scams. We've seen recently Mark Cuban was also scammed. Right?
Oh, he got scammed.
Yes.
All right.
So he got scammed. I think he supported a certain coin and then it went down.
Oh, it was an NFT, right?
Something like that, yeah.
Yeah, it was an NFT, I think, that he...
Yes. And then you see the other one. What do you call it? This company. The one that was supported by SoftBank. WeWork, right? So you see with WeWork, the people who invested in WeWork, they didn't do their DD. They just saw, oh, shucks, this guy, the Fabrice is investing in this company. That means it has a lot of money, or it values, it has a potential of growing. Oh, shucks. Pretty much it just became a thing of the fear of missing out, and all these billionaires came and gave money. They didn't do anything to make sure that like the typical investor things that you normally do. go and do your DD, make sure things are working, like the typical fundamental things to do when you're investing in something. They didn't do that. They lost money. Cool, fair enough. So you can see that even the cleverest of investors do that. Now, a normal, typical South Africa, where the financial literacy is not there at all, even if you try to bring it up to a certain point, it won't get to a point where you need it to be. What do? Do you push regulation heavily in South Africa to make sure people are not scammed? What do you do at this point? Because now it's very sad, because every day people are losing money, or the concept of crypto, and then people are giving crypto a bad name, and then it's not the case.
Yeah,
how do you regulate that, Fabrice? Regulate, Fabrice.
No, I mean, obviously, I think this episode's run, but we're not going to go deep into it. I think we need to have a chat more about the VC thing, and there's a lot of interesting dynamics there. But
yes,
when it comes to this problem, as we're getting back to of regulating without stifling innovation, you kind of have to just draw out the variables you're optimizing for, and that's where economics becomes interesting, because it's that cross between like physics, actual modeling of reality, and obviously there's the
engineering,
the engineering part, and then there's also obviously the more murky philosophical and political part, meaning assumptions about human behavior, what in game theory, all of those different things. And you now need to construct policy, putting those things in. Now, obviously, at many layers, you can innovate. There's the human behavior part, where I think the economic principles we have are outdated. All right. The models that people have. And obviously, macroeconomics has always been one of those disciplines very influenced by politics. Meaning, if you're in the Cold War time, anyone who said capitalism was great and was amazing was a genius and a guru, because politically, those ideas were more popular. Today, maybe let's say you're in woke world, anyone who speaks inclusivity, diversity, all of those kind of things, any principle that supports those ideas that, diversity is always great, will be amplified as the school of thought. So that's another problem there in that layer of the stack, is political and very murky. Then obviously there's the actual physical modeling of reality. How do people really behave? Now, when it comes to scams, one of the things we know is that, I think I spoke about it in the last episode, bad ideas always scale faster than good ideas. All right? Meaning that if you have two individuals and they both have limited energy, if the one spends more time propagating bad ideas and the other one spends more time propagating good ideas, the bad ideas will scale far. A better way example is in a crypto startup. If you've got R1 million funding, if I spend 70% of my funding marketing my product and 30% of my funding actually building it, and the other guy does the opposite, goes and gets senior engineers, all the architects, focuses on fundamentals and trying to build things right, the bad startup that spent 30% of their time and 70% of the time marketing will be the one most well-known. It will be in everyone's faces. More people download it. And hence, I think at scale, you'll always find these bad projects are more well-known, more prominent, etc. So that's now this question of modeling physical reality, modeling consumer behavior, modeling what is trending. So if I take that basic model that bad things always scale faster, and I take, let's say, on the philosophical layer, the idea that, people are always driven by quick, fast responses, meaning people are more likely to get something that will tell them they can win R1 million today, as opposed to something that will tell them they need to save for 10 years, etc., etc. So there's this way that human beings are in terms of how they think, their nature, those complicating things. And then obviously the other layer was the engineering now, is how do I build something given these parameters to regulate this thing now? All right. And that's where I'd say the cool thing we've seen now with the digitization of things, it means that you can build software rules that can do things at scale. So for example, take something like Airbnb, or let's say Uber. Before Uber, people just drove cars in the physical world, whichever way they wanted. Basically, atoms were moving around in a certain way. Uber comes, and you now have the software that is coordinating how cars are moving in a very systematic way. So there's this abstract way in which software is able to superimpose itself on systems and dictate how things happen at scale. So what that means is that from a regulatory point of view, an interesting question you'd ask is, how do you take this ability of software to regulate a lot of complex things at scale, all right, and apply it into this space? All right, so you've just described things like BankZero, clearinghouses, Reserve Bank, all of these different things. I mean, it sounds wrong, but it kind of like leads to this whole thing we have in China, the whole social scoring thing. Basically, where the government has one, for lack of a better word, system where everything is plugging in. All the cameras are plugging in, all the transactions are coming in, who you are, where you live, it's coming in. And obviously they're crunching and centralizing that, and they're now using software to start controlling people to the point where they literally have a score on every single person. I mean, there's literally, I'm taking a detour, there's literally people in China who can't travel because their social score is not high enough for the government to allow them to travel. That's how insane you can get with regulation and software. All right. Now, we also see that with that comes this problem of control, sovereignty, privacy. And Bitcoin is all built on this idea of the libertarian dream where you control, your life, live and let live. And I guess in the case of Bitcoin, it's essentially you becoming your own bank. All right. And so that's kind of like the balance to walk between China and total libertarianism. All right. That's kind of like, and software is definitely going to play a part. And for me, what's exciting with regulation, and I think is the new frontier of innovation, and Bitcoin has it too, is these technologies that allow you to regulate something without necessarily intruding on that thing. All right. So the similar principle to, let's say, your zero knowledge proofs. All right. And I think something of that nature where you can go in, aggressively check things without intruding necessarily on the fundamentals of that thing. All right. And I think for me, that is an interesting layer that I'd want to see some innovation around at a systematic layer. So you are China, you're getting all the signals, you're checking everything, but from a technology point of view, we can prove mathematically that you can't intrude on my privacy except but to do this. Okay. And that's where things like blockchain unleash this concept of mathematical certainty of something. All right, where even if the government wanted to go in and check whether or not you've been doing nefarious things, the system is designed in a way that they can only check that you are not laundering money, full stop. And obviously there's a cat and mouse to it because behaviors are complex, etc. So that's kind of like how I see it, to answer your question, is that there's the problem of the assumptions we have about human beings. There's the problem of the models we're using to validate some of these assumptions. And then there's the problem of now engineering something that obviously is balanced, that is not totalitarian in terms of becoming this new China dictatorship, but at the same time is also not too free, that allows any Tom, Dick, and Harry. Because when you don't become China, other individuals build nefarious products to scam them. So it's a wild, wild west. So you need a way of... So yeah, I've rambled a bit, but that's the three areas of thinking with regulation that you kind of need to solve for. And that's where innovation is important. The best tool we have in society is the ability to innovate. Today, all our innovation is being pumped in to build apps and products which essentially are optimized to show ads to people. Yeah. All right? The advertising model. So if you can take that and incentivize that energy into building more meaningful products that can stabilize society better. All right, so there's too much of our brains going into the advertising, social media, kind of like model, and if we can get a little bit of that into RegTech, and I think, it can unleash a whole new frontier of innovation. I feel like I'm repeating myself, but yeah.
Alright, cool. Okay, no, that's fine. I guess so. Let's end it there. So regulation. Obviously, we know regulation will feature a lot in our discussion as it always does. So yeah, let's see. Let's end it here, and it's a wrap.
Yeah, it's a wrap. We're done.